Welcome back to the Halftime Report. Big call on Walmart today. Deutsche Bank upgrading that stock to buy 3 years as sitting on the sidelines, that firm was. Now they say many years of investment in e-commerce and customer service are beginning to pay off. We've made it our call of the day. Stephanie Link, I give this one to you. They say they've spent the money. They've spent the money, and now it's all paying off. They're going to get more market share in grocery and all of the areas that they've invested, e-commerce and otherwise.
It seems a little early to me. I mean, they've just started to make these investments, and you're just starting to see some results. But I think it's going to take a long time, and I actually think they've got to do even more in terms of investment. But I do applaud everything that they're doing. I just think that at 20 times forward estimates, you're expecting them to deliver a lot. And I just don't know how much market share they're going to get. Like, look at Target, for example. Look at all of the initiatives that they're doing, all the private label momentum that they have, and it's trading at 15 times forward. Even Costco, really expensive at 28 times, but they're still seeing upper single-digit comps.
So you don't think...
I think the environment is competitive, and I think what they're doing, what Walmart's doing, is right, but I don't necessarily want to own the stock.
You don't think they deserve the premium multiple that these guys are willing to give them for all of what Walmart has done, right? They're looking for $113 as a price target. So what's that, $16 higher from where it is now?
It could work. I just think that there are better values elsewhere, and I just don't think it's going to be so easy for Walmart to see returns. I mean, they're talking about EBITDA gains. And I'm not sure, you're going to see maybe market share gains, maybe you're going to see sales gains, but I'm not sure you're going to see operating leverage because I think it's going to come at the expense of margins. So it's just not that easy. That's my point.
Explain this one to me, Pete. Year to date, right, Walmart's down 2.5%. Yeah. All right, Amazon, everybody knows, up 60%. But Costco's up 20, and Target's up 32.
Yeah.
They're eating these guys' lunch.
You know why? They actually do have margin, to your point. I mean, you look around and you look at something like Target, right? And I bring this up all the time, but when you talk about what is the biggest focus of today's, the analyst report today, they're talking about growth in groceries. Well, Scott, the problem I've pointed out time and time again, 56% of sales for Walmart is in groceries, okay? Well, how's the margin there? Meanwhile, you look over at Target where it's 20%, 20%. They have 5 different categories. Groceries one of them, 20% of their revenue. And that's been their focus. So they're focusing on what I think is the right thing. Plus, Steph points out, I mean, one of them's trading at 20 times with no earnings growth forward, with maybe 3% in revenue growth. Meanwhile, you look over at Target, growth, at trading at 15 times. It doesn't even make sense. There is no choice here. The choice is Target.